Hello investors, welcome to Simpli Stocks. Over the last 2 to 3 years, there has been a significant shift in consumer demand in India. Your regular consumer demand is growing at a slow pace, but the demand for premium products is increasing very rapidly. For example, if you observe over the past several years, there has been almost negligible growth in the automobile sector as a whole. But the demand for higher CC motorcycles and SUVs, or basically expensive vehicles, is growing rapidly. We are seeing a premiumization shift, or in a way premiumization theme in consumer demand. So in today's video, we will study 5 businesses that are operating within this premiumization theme. But yes, as a standard disclaimer, none of these businesses are buy or sell recommendations. You need to keep that in mind. With that being said, let's begin. First, we will understand why this premiumization shift is happening. You can see in this screenshot that from 2017 to 2022, in these 5 years, the number of people with an income of more than 10 lakh rupees has been increasing at a 19% CAGR. In India in 2023, there were 6 crore affluent consumers, or basically your wealthy consumers, which is expected to increase to 10 crore by 2027. So the population with an income of more than 10 lakh rupees is expected to continue growing at a rate of 13%. This means that one major reason for the premiumization shift is that incomes are increasing. Apart from that, people are starting to prefer premium experiences. Even if it costs more money, they prefer experiences that are slightly premium or give a sense of luxury. We have seen a preference for these premium experiences increasing, especially after COVID. One reason for this is also generational shift. The new generation that is coming in prefers premium experiences. The iPhone itself is the biggest example of this premiumization shift. Even though people can manage with cheaper phones and many people's incomes are not that high, you will still see that iPhone sales have been increasing very rapidly in India. Similarly, if we look at other examples, the sales of expensive alcohols of United Spirits have grown faster than their regular liquor. Similarly, in the case of cars, over the past several years, the demand for ordinary cars has remained stagnant. The market is not growing, but the sales of SUVs, that is bigger vehicles, has been increasing continuously. And a big benefit of this premiumization shift is that sales of companies are growing at a faster rate. But along with that, since premium products have better margins, we can also see margin expansion happening in businesses which are operating in this theme. So in this premiumization shift, we are at a good point where we can expect strong sales growth as well as margin expansion in companies over the next several years. Now, the first business we will study is Timax Group. We had covered Timax in our community and also on the channel back in May when their Q4 results were announced. You already know that they manufacture and sell watches. They have their own brand, Timax, and in addition, they also sell watches of global luxury brands such as Versace, Guess, Philippine, Adidas, and others in India on a licensed basis. Timax is a big beneficiary of this premiumization shift. You see, even though smart watches are trending, when a person gets money, they first spend it on improving their lifestyle. They spend on good clothes and watches. They buy analog watches. In this context, I was observing that Titan's Q2 business update stated that their analog watch sales increased by 17% compared to the last year. So that is also a very strong signal for us. But what has happened is that Timex has rallied quite a lot recently. So you need to keep valuation in mind. Although the business growth is very good in Q1, that is in the months of April to June, their sales grew by 55% over the last year, and they also declared a net profit of 15 crore. If equally good results come in the September quarter as well, it can act as a trigger. Otherwise, you can keep this business on your radar for the future. After Timax, our list includes 2 auto ancillary businesses, FIEM Industries and Lumax Industries. Both FIEM and Lumax manufacture lighting systems for vehicles such as headlights, tail lights, etc. And both are a good proxy play for the premiumization shift in the automotive industry. The difference between the two is that FIEM caters to two-wheelers while Lumax manufactures lighting systems for four-wheelers or cars. There is a very strong growth in LED lighting systems of both the companies. What is happening is that market is shifting from halogen lights to LED lights because LED lights are better in many aspects. Additionally, in general, the market is also shifting towards premium fancy LED lights. For example, if you look at new EV models of Mahindra or Tata, they have very fancy lighting. So whether it is two-wheelers or four-wheelers, the market is moving from halogen to LED lights. That is benefiting these companies. Plus, The use of fancy lights in expensive models is also increasing. TM supplies its products to Honda and TVS as well as to the likes of Harley Davidson, Ola, Ather, Royal Enfield. Their LED lighting business is currently growing at around 20% rate. In addition, they have segments for rear view mirrors and plastic molds, which are growing at around 10% each. That is why you will read in their transcript in Q1, their sales growth averaged to 13% year on year. As their LED lighting segment becomes bigger in size, the overall growth rate will increase. Currently, LED lighting accounts for 64% of their total auto lighting business. Similarly, Lumax has a customer base of major players like Tata, Mahindra, and MG. They have also guided for similar 15 to 20% sales growth along with margin expansion. So both of these businesses are currently growing at around 15 to 20% rates and are also trading at good PE ratios of less than 30. And I know I keep saying this again and again and you don't listen, but still, as a humble request, if you are liking this video, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Let's get back to our discussion. Finally, the businesses at the fourth and fifth positions are from alcohol sector. You can say that the most visible premiumization shift has happened in alcohol sector, and Radico has been leading this shift for the past 6 to 7 years. Radico has launched several brands in the premium expensive alcohol segments such as Rampur, Ranthambore and Jaisalmer, which have been back-to-back hits. Similarly, for Piccadilly, their Indri whiskey has been a super hit. These expensive alcohols have contributed to strong sales growth for both these companies, and along with that, their margins have also expanded. This has resulted in even better growth in their net profit or bottom line. However, Radico's journey has matured a lot and its valuation has also become quite high. But now, in these two small cap businesses, the same premiumization story is playing out. One of them is Tilaknagar Industries and other one is Allied Blenders and Distillers. First, let us look at Tilaknagar. Tilaknagar is known for its Mansion House brandy and Blue Lagoon gin. About 90% of their sales come from brandy. They are primarily focused in South India, with the South contributing 85% of their sales. Now, what is the trigger for Tilaknagar? So, they have acquired the famous Imperial Blue brand from Pernod Ricard. Imperial Blue is primarily a whiskey brand. You may have also seen their ads, the Men Will Be Men series, which are quite funny. Through Imperial, Tilaknagar will gain entry into other states where they are not present currently. This will give Tilaknagar a big advantage. As you can see here, I mentioned that Tilaknagar is south-based, Imperial Blue is present pan-India. And the biggest advantage Tilaknagar will get is the entry into the premium segment. Last year, Tilaknagar sales were almost 1400 crore rupees, while Imperial's Blue were 3000 crore. In terms of sales, Imperial Blue is about twice the size of Tilaknagar. This will make whiskey a major part of their business. It will take some time for the benefits of this acquisition to reflect in Tilaknagar. So if you are interested in Tilaknagar, you'll need to have a long-term mindset. This business is currently trading at a P of 30. With the addition of whiskey portfolio, we can also see a good P re-rating happening over here. After Tilaknagar, let us study Allied Blenders and Distillers. Officer's Choice and Sterling Reserve are allied to famous whiskey brands. Additionally, they have launched iconic whiskey 2 years ago, which became quite popular and brought good growth for them. They will scale this brand further. Besides that, they have also launched several new products in their super premium to luxury portfolio. In their super premium range, they have launched Russian Standard Vodka, Zoya Gin, Woodburn's whiskey, and several other products. For the next 2 to 3 years, ABD aims to achieve mid-teens growth, that is 14 to 16% sales growth at the consolidated level. Additionally, they are investing 525 crore rupees for capex to expand their manufacturing capacity for ENA, malt, and PET bottles. ENA is a type of raw material for alcohol companies. With this increased capacity, their margins will improve. Currently, they source ENA externally. Allied's current EBITDA margin is around 12.8%, and their target is to improve it to 17% by FY28. This 4% margin improvement will significantly boost profitability. About 2% benefit or improvement will come from the recent free trade agreement with the UK. This will make Scotch whiskey cheaper in India. Scotch whiskey is used as a raw material in premium alcohols. We will start seeing this effect from Q4. Currently, their ROCE is around 17%, which they aim to increase to 23 to 25%. So roughly, if we assume 15% sales growth and 4 to 5% margin expansion for ABD, we can see good 25% plus CAGR growth in their bottom line or net profit in the future. So ABD can also be a good premium bet that you can study on your own. Now, if you like this video, then do give me a thumbs up. Apart from that, you can also subscribe to our channel. For us, your likes and subscribes are our only motivation so that we keep bringing such high quality research videos for you every week. So do like this video and yes, subscribe to the channel. I'll meet you in the next video. Happy investing.